Vincenzo's Gold Crypto Investing this May the 29th, 2025 noontime daily cryptocurrency, the blockchain technology, gold and silver video to keep you updated with the information, education, and truth with the trustfulness that you've come to expect, law of need and deserve. And you can see we have multiple things going on here on the screen at the same time. If we bring in our industry exclusive YouTube made famous perching tool, you can see we have the price, the moving averages. We have a form of the VIX volume profile coming from this side, starting from the bottom of this pump back here. And you can see where the major volume is at these two mountain, actually a triple top now if we continue to trade down with the rising channel here. As you can see, this is a major support area between the 94,365 and the 98,350, and that was resistance on the way up, and you can see the consolidation there, and then it finally broke to the upside. And then notice, obviously, there's very little volume up here because you're in price discovery, right? Because this is an all-time high up here at $112,000, just taking out the 108,000 and the 109,000 and change, right? And then you notice in the back, something that helps us use in our industry exclusive formula to technical trade on bullish or bearish, short, long, macro, or micro time frames. You can see our tracks, and you can see from when we got to the double top, what we started looking at right here. And you can see we have a blue track, a purple track, and then there is a green one sneaking in there somewhere. Or did I get two of them the same color? I thought I had three of them on here. Maybe there's only two on here. But you can see the variance with them, right? You can see these two are grouped together. And then they're grouped together coming up into this rising channel. And there it is. There's the other one. We made two of them, unfortunately, the same color by mistake. We need to go a completely different color. There we go. See that? And then we'll make this one. There's our three. Okay. I knew I had three there. But you can see they all take the same sort of pattern. Let's zoom out here. They all took the same sort of pattern here. And this is one of the things. And there's many more of these that we have than just these three, but these are some of the variances that I wanted to show you. But they all had it up here. Still do not want to buy you in this all-time high. Then you can see they all started to trade down, right? As we had this bearish consolidation. One of them came all the way down here to 65,000. The other one on the more north track only came down to right there. Look at it, double bottom, beautifully bottom pump. Right where we double bottomed, right, on that 75,000. And then you can see it traded up just to about two of them where we came to now. But the one that corrected the farthest down was the one that had it coming all the way up here to 138,000 when we had $118,000 as our upper target during this whole push to the upside. Now, if you can see what we got going on into the future, which also makes sense looking at our volume profile on the side, you can see two of these now are right here. Actually, all three of these, 1, 2, and then 3. The one continues to pump up, but all three of these tracks are together. And when they're all lined up, usually the price is buy them. They're all lined up, price is buy it. But now two of these trade down and sideways and start to come into the 50-day moving average, the 100-day moving average, and that critical underneath 97,211 and 97. Major first support level, right where the volume is at, where the major support you would expect a major try to hold here in a lot of play. And you can see two of these now, and the tracks trade sideways along it and just underneath it along the 200-day moving average into the 50-day. Right there you can see the tracks trade sideways, and then we have a big divergence. The one that went way north starts to come way south. One of the two that were trading along each other, they start to diverge about July the 7th, where one starts to go straight up into the next leg of the bull market, one starts to continue sideways and then consolidates down to the downside. So there's a lot of variance. And then if you look at it going out into the long-term future, if you notice you have two of them that meet, they take completely different paths, but two of them meet up here. Let me get the color back on there. Two of them meet up there at the end of 2026 going into 2027 up there around $120,000, $130,000, but both by coming to a different path. One of them takes it back down to 80,000 first, right? And then you can see our outliner, which is very interesting. One of the patterns here, the one that actually went the highest to start, comes all the way down very conveniently, all the way down to a technical target that we had here. If this was what we thought we were going to be in a macro head and shoulders, topping out reversal pattern, but then it also has the most bullish action long term. Look where it ends as we go into 2027 and 2028, $260,000. So these are just some of the tracks that go into a basket of goods to help make a forecast, along with the technicals, the news, and all the other things, the volume, the moving averages and such. And if we look at the moving averages still, they continue to trade up. It's at $90,000 now, the 200-day moving average. Come on. Yeah, this is the only thing that sucks about this. These get hard to grab now. I know it ain't locked. Come on, I'm not trying to grab that. Let me grab this. Jesus. You can see 99,000 is where the 50-day moving average is, and I'm not about to try to fight with that. And the 94,000, just about 95,000 is the 100-day moving average. And if we look with our track, with the VP or the fixed volume profile on the right side of this, you can see if you continue to break down out of this rising channel right here, you obviously, like we were talking about, the 50-day to the 97,000 is your major support. You can see right there with the volume there. And then if you slip that, the 200-day moving average is your major critical bull run or continued all-time high run support level. You would have to hold that right there at that 90,000 to continue the bullishness. If it slips below that, you have major bearishness and a major correction that's going to take place. So we're continuing to see it's threatening to try to break out of this rising channel, but it's also hasn't done it yet. And every time it's tried to on this run up, it's had another bullish run to the upside. Same thing here with the XLM. You can see we're still sitting where we've been for the last several days, right in between the moving averages. You can see we have our tracks on here too. We have 4 of them on here, and we got the outliners with the pumps to the upside, brings you way up here quickly, almost to 90 cents. The outliner to the downside brings you all the way down here as low as the 11 cents, but getting right to about a technical target that we had down there. And then 2 of them aligned together, which pretty much trade sideways for the next several months, but continue back off to the uptrend and go make a new run by the end of the year and the beginning of next year at that 63 cents. So you can see there's a wide variance, and these are some of the things that our computer models try to put together as they try to forecast the future based on the technicals, the news, the volume, the momentum, existential things, like the stock market, what the government's doing, wars, things like that. And then I try to put my own touch on it, where I take everything and try to figure out exactly what's going on. And you can see right now it's sitting right there in the middle of all these tracks, right? We got the 2 that are following together, and then the outliners. We're sitting right in between the 100-day and the 200-day moving average. They're very tight. They're running parallel, which means there's a massive move about to come. If the move's to the upside, it'll shoot very quickly in the matter of days to 43 cents, which is a very big move from the 28 cents about where you're at now. If it breaks to the downside and can't hold the moving averages, you would dip initially down to this 25 cents, an area that 1, 2, 3, a fake out, 4 held it to hold it and keep it as bullishness and support, a lower support rate, major lower support right now. But if it breaks that, you can see that's where these 2 targets to the downside, where I still feel the 18 cents would come into play, and then the 14 cents if this breaks and busts and blows out, burst to the downside. We have a big move coming in the market, and the move to the upside is going to be very big. But in contrary, the move to the downside is going to be very violent too. And that's why you can see the tracks. They are hedging a run in the long term, as I am, of new all-time highs. And you can see one actually hits 391 towards 2027. Not saying it's going there, but you can see we have 3 of the 4 tracks by the end of 2026, 2027, between 80 cents and getting close to $1. And that is long term something that I'm thinking of. But short term, I'm thinking we may have to go through a normal consolidation for a year or a year and a half correction, but I'm not sure yet. You can see the XRP price, the same thing. We have our tracks on here. We have 4 of them. We have the one outliner to the upside. You can see how it blow off top to the upside, all the way up here, bringing it to $18 by July. I don't see that happening in a super July rally, but you can see the outliner that I just put on there just because. The other 3 run very close together between now, but the farther out into the forecast you get, the farther they start to spread out. And then you start to see a big deviation towards the end of 2025 and start of 2026, where they start to branch out. Some continue to sell off before the bull market, some start the bull market, but you can see the spread is very, very far apart. But the one thing that's certain by these 4 tracks that we have, as you get into 2027, look at, they're all coming up here to meet together, all up about $3 to $4, over $3, between the $3 and $5 as we work our way into late 2026, 2027, which would make sense with the way the cycles have worked. And that's very, very interesting. And this is the area that I'm targeting for a potential $4, $5, $6, or $7 XRP to hit some of these technical targets of the 340 and then the 468 and then the 1230, right? To hit those targets, that's the area that I'm paying attention for in our long range algorithm that's going on here. Is that's what in the next leg of this bull run, or the next pump in the next cycle top, that's where I feel like we're going to go. But currently right now, just like the XLM price, we're sitting on a constricting moving averages. We have the 200-day at 206. We have the neckline support at 209. And we have the 100-day and 50-day running together. And again, if this pumps to the upside, just like XLM, you will run very, very quickly to $3.02. But if we get rejected and this starts to break to the downside, you'll come right back down to the 200-day moving average, where that would be the critical time. Are you going to hold it as support again and continue the run? Or are you going to slip it and you would fall very quickly down to the cycle low of $1.62? Like the channel, subscribe. We'll have an altcoin update come out mid-afternoon before our evening update this evening. Peace and love. The Rex Eyebrow. JJ.